Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, folks, we're going to get into the nitty-gritty of the charts. Remember, no BS, just charts here at Verified Investing, which ultimately give us probabilities. And if we can have probabilities, we know what trades to play that give us a high win rate, and the rest takes care of itself. So first and foremost, this week has been pretty void of earnings. We do get Delta earnings tomorrow morning, so that's something to kind of keep an eye on. Overall, the only thing I'm watching today economically is the 10-year bond auction at 1 p.m. And again, the long bond, we've seen it go up. The 10-year yield cracking basically 4.4% this week. And I want to see the results. Is it strong demand for U.S. Treasury debt? That, again, is something we'll see later today. I would say that's the only thing that, aside from new trade war kind of, shots across the bow, that is the only other thing that could create some intraday volatility. Now, if we flip over to the charts, as we always do, we can see that, again, the markets in the overnight, this was yesterday, by the way, so really just choppy, flat day on the S&P. In the overnight, the markets initially were kind of floating a little bit lower, and then right at around 2 in the morning, the markets began to rally higher. And by the way, this coincided just around the European markets open. So you did see some interest coming in there, and the markets, again, the S&P futures climbing. Listen, in all fairness, look at where we went. We went right to yesterday's high. So it's not like we're soaring by any stretch, but the markets did kind of catch a bid, and we are setting up for a positive open today on the S&P. Notice the pullback here coming in after tagging and piercing the high from yesterday on the futures. We are seeing a little bit of profit taking ahead of the market open in just under 30 minutes. All right, so a couple things to go over. Let's flip over to the S&P chart here, and I want to go to the daily chart. So we know we have this level, this upsloping trend line here, this upsloping ascending trend line coexisting right in this area as well. One other thing I wanted to point out to you guys, which is kind of interesting here, is there are other factors as well. Like, take a look at this trend line. I mean, this is really amazing. I didn't really bring this to your attention, but if you look at the S&P, this low here connected to this low in January. So the September 2024 low connected to the January 13th low on the S&P, it gives us that exact high as well. That, again, would be a triple factor resistance line. And what this means is, it doesn't mean the markets are going to collapse. In all fairness, the last couple of days is anything but a collapse. It's kind of a gentle, soft pullback. But what it does is it creates a zone up here of epic resistance where, again, even if the markets push up, they could make a new all-time high because the lines are upsloping. But for the most part, they're going to run into a lot of resistance right up in this range. All right. So again, keep that in mind. You're into this higher end of resistance now, around 6,300 on the S&P, give or take a little bit. That, to me, again, is a level that must be taken out if this market is going to go substantially higher. Listen, we could still be in float mode because it's summer, the volume's light, the markets seem to be in this mode of kind of just floating. But to get the real big upside is going to be tough unless we take these levels out. Now, I don't usually go over the Dow Jones Industrial Average, but I wanted to go over it today. So this is your Dow Jones weekly chart. Obviously, the Dow is an index that many people pay attention to. I wanted to flip over to our logarithmic chart. And on the logarithmic chart, we're going to stay on the weekly. And what I want to do is take a trend line on the log chart and take it from the highs of 2007 before the great financial crisis. And when we do that, we can see very clearly here that taking that line and connecting it through basically the highs of the bull market in 2021, and look at what we get. We get the exact highs that were tagged on the Dow in 2024. Then we had a little double top. Then we had our big correction. Now we're pushing back up. So what does this tell us? Let's break it down. This tells us that the Dow itself, it could go up, but the limit is right around 46,800, maybe 47,000, right at that level. Now, technically, would that be a new all-time high on the Dow? Yes, it would. But again, it's capped at that level. If we look at percentages, you're looking at a Dow currently, which is slated to open around 44,400. We're looking at only about a 2,300, 2,400 move to the upside. That's about 5% or so of upside in the Dow before it runs into major resistance. Now, listen, in all fairness, is there any guarantee that we're going to go up there? No, because you could actually take this high, connect it through this, and look at what you get, right? So isn't that interesting? Look at this high here to here. But I would say, if as a technician of the charts, letting the charts talk to me, what I would say is if you break this level at 45,000, then it opens the door to going to 48,000 or so. Again, 48,000 and change. So again, keeping an eye on that. And by the way, I miscalculated there. It's around a 10% move up. That would be at max a 10% move up to about 48 from this 44,000 and change level. A little under 10%, about 9% give or take. But right now, interesting chart. The longer term trend line gives us a baseline of how much upside can be potentially expected if the markets continue to go based on the 2008 great financial crisis pre-high to the highs of the bull market of 2021 to the highs in 2024. And obviously we have this shorter term downsloping trend line that we have to get through. And listen, if we don't get through that, then technically you would keep a negative bias on the market, on the Dow. But if it gets through that, then you have to flip over to a bull for a move up here to about 46,800. And then, excuse me, it's 46,000. So back to that approximate 5% level. You could tell it's a Wednesday. That's always on a Wednesday. All right. Okay, so let's flip over to the US dollar and take a look here. If we look at the US dollar, it continues to stall out at this level. Today with the 10-year bond auction, I'll be watching very closely to see right around 1 o'clock, do we get a move up or down on the US dollar, and also, frankly, on the 10-year. But right now, this is resistance right here around 97.70 to 75. Does it start to get rejected, and do we come down and take out the lows and make our next leg lower in the US dollar? Or can it fight through like the US 10-year has done, right? The 10-year yield pushed above this trend line and is now above, right? Now it's pulling back a little bit today, but same thing. Watch that 10-year bond auction to see where it goes here on that around 1 p.m. today. Now, I wanted to talk a little bit about the VIX. The VIX is hovering down around 16, just about to break 16. Now, the reason I'm bringing this to your attention is it's now getting into complacency mode. Now, what is complacency? So first off, you have to understand what the VIX is. For those of you that are new, the VIX is a fear gauge. So when it's high, it means there's a lot of fear. It goes up when fear increases, and it goes down when fear decreases. So essentially, the more complacency in the market, the lower it goes. Historically, if you look at the lows on the VIX, the average lows on the VIX, it's between 12 and 15. All right. Now, I have seen it get as low as 10. That's very, very rare. But again, there's been small periods where it's gotten that low. But the point is, we're starting to get into that 15 range. In addition, I don't know how many of you guys follow the small micro caps, but penny stocks have been going up 500% a day, many of them. Right? I mean, essentially, it's become a lottery or people gambling in the penny stock realm. You've been seeing more and more pump and dumps, kind of like what we saw in crypto in 2021. We're now seeing in the micro cap zone here of stocks that are under 100 million in market cap. So if something like 2 million, 5 million, 10, 20 million, these stocks are actually getting pumped and then dumped on by these online forums, these online people that are being hired to do this kind of stuff. So be careful out there, folks. Listen, there's a lot of money to be made, but you know what? When the music stops on them, they will collapse back down. And the reason I bring that to your attention, not because I have any of them for you, I don't trade that stuff. I am going to show you what I consider to be a small cap that I like as a trade now, as a swing trade. But those are way too small for me to mess around with anymore. I'm not going to play in the 5 million market cap zone. That's when I was a young trader and I messed around. I lost a fair amount of money doing so, to be fair and honest with you guys. But the key again is it's showing complacency. And complacency, where people think that it's a get-rich-quick scheme in the markets, it's a warning sign for us all to pay attention to. And you saw this exactly in 2021, whether it was altcoins, whether it was small caps, whether it was the GameStops of the world, the AMCs of the world. Those, again, were warning signs that the market was nearing a top. Now, the only thing that's tricky about this is you don't know if the top is a day away, a week, a month, a 6-month period? That's the question. And that's what we're looking to find out when we look at the Dow chart, the S&P chart, and these other trend lines. All right. So back to the charts we go here. Let's take a look. My trade here is WeRide. It's about a 2 billion market cap. So again, far cry from the 100 million or sub level. But I like this chart here, guys. Look at this beautiful little wedge pattern. This is autonomous driving in China. It's really gotten some good credence. I like it overall here as it's broken above. The chart, again, has broken this down sloping trend line. Look at that beautiful trend line right there. If we bring this up, you can see high pivot to high pivot, and then it hit right here, small pullback. It was held by this line and broke above this area here. So WeRide, to me, listen, in a market where a lot of these mid-smallish cap stocks are going nuts, this one would be one that got my attention. I did pick it up with Smart Money Stocks and ETF members yesterday, and we'll see again if it gets a bigger move. Upside near term, $12, probably this high pivot will act as significant resistance. Now, let's flip over to a mega cap. Let's go over to NVIDIA. NVIDIA today, guys, again, is trading up slightly on the day. What I found here is, look at this parallel. So from these tops right here to this low is a perfect parallel to the highs on NVIDIA here, 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 and here, right? And so what that tells me is, it tells me that if NVIDIA pushes up to about the 164.25, 164.50 level, it's going to run into a upper parallel where we saw a major top back in June of 2024, where it dumped out from $141 to $91. And then these highs here, which eventually it cratered from basically 152 down to $87. And so as a technician, I'm not trying to reinvent the wheel, right? All we're doing is we're trying to use charts to help us predict where an overbought chart is going to see a bigger correction. In addition, you can't deny this trend line here, low pivot to, you could see the gap down below, but then it became the high pivot and this little high, and we just tagged. And notice these two trend lines are merging right up in that 164 range. And to me, that's where I start to say, all right, this could be a level where NVIDIA is finally ready to correct. And don't forget, I showed you guys yesterday the SMH. The semis are also up into an upsloping trend line and a double top area. So again, there should be a lot of resistance on the semis up in this range. So suffice it to say, the NVIDIA chart, maybe another 2%, 2.5% upside, very minimal upside there. But again, at that point, you would begin to expect a pullback. All right, flipping over to Bitcoin. Bitcoin continues to look a little bullish here. Now, again, yesterday in the game plan, I went over this chart and I said, guys, here's your flagpole. Here's your sideways consolidation. That's really a bull flag, a short-term bull flag. Now, listen, it's only short-term, meaning that it only predicts what could happen most likely in the next few days to the next week. But nonetheless, for all those of us that are traders, that's good enough in many situations. And you can already see Bitcoin starting to creep up above this trend line here, right here. And that opens the door to at least tagging the 112,000 double top. Now, if it goes beyond that, then we start looking at these longer term trend lines, right? So you go back to the 2017 high, 2021 high, second 2021 high, 2024 high, and then the 2025 high potentially over here, right? If we push up into this zone right up there. And that's right around 114, 115,000. So listen, same thing on Bitcoin. While Bitcoin short term looks bullish, the upside is somewhat limited on the charts to basically 4.5 to 5%. So again, yes, Bitcoin could go up if you're a shorter term trader. The odds favor that right now, but just keep in mind, it's not, at least for me, all these speculative kind of, oh, it's going to 250 by the end of the year. Listen, it might, but to do that, it needs to break above this longer term trend line. If it can do that and confirm, okay, now we can start talking about these higher target prices. Like, what's the next target after the 115 level, which is that upper trend line. But again, it's very important for us as traders and investors. And I mean this universally. Like, you could be a day trader, a swing trader, a long-term investor. The point is you need to follow the lines on the charts. The charts give us our best read based on probability. So it's great for someone to say, hey, I really think Bitcoin's going to 250,000, a million. You ask Michael Saylor, you get lots of these crazy things. Now, granted, he's talking longer term, but a lot of these guys are talking shorter term. And my only thing is that has an emotional impact on retail investors. And this is one of the things that I pride verified investing on, is kind of calling that out and pointing out that, hey, guys, understand that when you hear these people say, oh, it's going to 250 by year end, there's a response in our brains because we want to believe that says, oh my gosh, I got to put all my money in this. I got to just go all in. And while it could happen, you have to understand that that's emotion now pointing to that. And you want to let the charts start to guide you that way. And right now, the charts on Bitcoin don't guide me in the shorter to midterm towards that target. Longer term, I'm a big believer, as you guys know. But shorter term, I rely on the charts. And the charts are our friends in this situation. All right. A couple other charts to go over here. Let's go over the gold chart today as we flip over to gold. Let's go back to the daily chart. I have been a little bit more bearish on gold this week, guys, because I do think it's on the verge of breaking here. But longer term, this is your support, and this would still be a bigger bull flag if it stays in this parallel. So we're borderline breaking this longer term uptrend from 2024, December of 2024. Even if it does that, yes, shorter term, you probably come down here, but that then becomes your buy zone on gold for that next leg to maybe $4,000. Notice again on gold, I'm talking, the high was 3,500. This would take us down to near 3,000. My upside, I'm just talking 4,000 versus many people out there are like, oh, 10,000, 20,000. It's like, just like with Bitcoin, that's emotion speaking. Talk more realistic, which keeps emotion out of it, right? What do the charts guide us to? And really, to be fair, when we come down here, you only talk about even the all-time high on gold when you take out the upper parallel, right? That's going to be your resistance, and it has to be respected until it's broken. All right, let's look at silver, which again remained bullish yesterday. Today, again, it's creeping below this line. But I have to say, I'm impressed that while silver has not confirmed above the resistance line here, it closed above, stayed above, but hasn't confirmed yet. And we'll see what it does today. It still hasn't closed below. So we'll see what happens today. If it continues to hold above, it's starting to make another bull flag. And I continue to be bullish on this chart in the near term. All right, oil is up next. Let's take a look at oil. Oil went to the high end of my parallel here, which is a bigger bearish pattern formation. Still not a shortable setup yet for me. But again, notice how yesterday it tagged and pulled back. Today it kissed, pulled back. This, again, to me looks very fair. Beautiful little short-term parallel bear flag forming off of this flagpole, upside down flagpole, which is what the definition of a bear flag is essentially. Natural gas, guys, look at this. Notice we talked about how many times it was hitting on this line over here. 1, 2, skipped one day, 3, 4, 5, finally broke. Now it's coming down, right? And where is that target going to be? Somewhere right around this 308 to 309 level. And again, you could just see how it was hammering and not bouncing, all right? Notice in this situation, came down, got a big bounce. That meant it was safe, right? It saw a lot of buyers. Here, when it fell this distance, it only saw a little bit of a bounce, which means there were still a lot of sellers in there, right? Because again, remember, sellers versus buyers. So if there's only buyers, it gets a big bounce. Well, and listen, there's always some sellers, but mostly buyers, big bounce. If it's more equal, it's getting more of a sideways chop hammering on that level. That tells you that, again, there's not enough buyers really to keep it up. Eventually, the sellers take over, and down it comes to that target zone. So watch for that target, guys, on the chart of natural gas. As always, guys, I am here. I'm your advocate. Verified Investing is your advocate for really being more focused on probability. There's so much hype. There's so many narratives out there. Social media, honestly, has only accelerated the emotional response in all of us. If you're on there, listen, if you're not on there, then good for you guys, because you probably avoid a lot of that. But listen, even listening to friends and family can get us all emotionally charged on an asset. The key is, again, what is the chart telling us, which equates to what are the probabilities. And that's, again, how we cut through all the noise all the junk out there, and essentially no BS, just charts here at verifiedinvesting.com. You guys have a great rest of your day. I'll see you, some of you, in the trading room today. Otherwise, have a great one, and I'll talk to you soon. Take